Welcome to Smart Women Talk. This is your host, Katana Abbott. I'm a midlife millionaire coach and a certified financial planner, and I search the world for smart women and a few good men, including best-selling authors and thought leaders who are on that leading edge. So join us for conversations on money, business, health, and inspiration, so you can live with more purpose, passion, and prosperity. Hello, everyone. This is your host, Katana Abbott, and I want to welcome you to Smart Women Talk. Today, we are interviewing the CEO of Be Wealthy and Smart, Linda P. Jones, who I have known for many years, definitely over a decade. We're going to be talking about how to stay confident during these turbulent market cycles. We've seen them happen before, and we're in the middle of another one. So we'll talk about how to handle market volatility with confidence, why women are great investors, and just basically the joy of investing. So we don't get scared, that we actually see that there is a system to it. So we're in for a great show. Let me tell you a little bit about Linda. Linda shares wealth building secrets, tips, and knowledge that made her $2 million at the age of 39. She teaches that financial freedom is about making the right choices and investing well. And she believes anyone can become wealthy no matter how much money they're starting with. Her first book, You're Already a Wealth Heiress, Now Think and Act Like One, is on the list of all-time best wealth books by Book Authority. And her latest book, 3 Steps to Quantum Wealth, The Wealth Heiress Guide to Financial Freedom by Investing in Cryptocurrency, is a #1 international bestseller. So her award-winning podcast, Be Wealthy and Smart, is really a blast. They're real short podcasts. You'll love them. They are listened to in over 130 countries and has over 7 million downloads. So Linda, welcome to Smart Women Talk. This is our chance to circle back after 6 months, and things have changed a lot, haven't they?
Yes. Well, Katana, we're used to it in the investment industry, right? Things are not always smooth. It's a lot nicer when the stock market's going up and crypto's going up, but we have these periods of time that give us opportunity. So we have to look at that as well.
Absolutely. So, we want to really, most of our audience is women, but not all of them. And we want to really focus today on all the women. And, I've been talking about, and I've been sending emails out to our Smart Women community, because a lot of the women who I've met with, and the women that I work with are 60 plus, sometimes younger, but they're moving into their third act. And Linda, I kept finding that almost all of them were 100%, maybe 80% in stocks. And they didn't know it because they were in stock mutual funds. Most of them, they weren't aware of it. And so I've been, especially since last fall, when we hit that high, I've been saying, make sure if you're getting close to retirement age, that you get safe with part of your money and then diversify. And I don't know how many have done that, but, with a few people, I was able to help them shift. But what are your thoughts about this, about making sure that when you get towards retirement, having part of your money in safe, and, what are your suggestions? Because interest rates were so low, but, now they're going up.
Well, we are in a unique time because interest rates have been in this long-term cycle where they've been trending down, and we had interest rates basically at zero for a period of time where you weren't getting any return on your money. And it also puts you at a little bit more risk because as interest rates rise, the value of bonds go down. So now we're in a situation where we could see bonds in a place where they're not adding to people's portfolios. We used to have it easy in the investment industry. We used to say 60% in stocks, 40% in bonds. And that's when bonds were yielding about 8%. So they were actually contributing a really nice return to the portfolio. But since bonds moved to 0% yield, and now interest rates moving up, they're in a position where there's more risk. So I think people have to be aware of what they're doing with their portfolio and, as you say, diversify. But stocks do go up about 80% of the time. So it has worked to people's benefit to be heavy in stocks for all of this time. And I do think that we are going to get back to a bull market. I think this is a pause and sort of a shakeout in crypto, but I do think that we have some really strong growth ahead of us. So I would say if people have, 10 years or more until retirement, they probably want to still hang in there with being aggressive to some degree. They don't have to have 100% in stocks, but I think being able to take advantage of this bull market that is happening this decade, I believe will be to their advantage. But anytime you're getting, a few years away from retirement, you definitely want to pare back, get a little bit more conservative, and think about other things. It might not be bonds necessarily that you use to provide income to your portfolio. You can use dividend paying stocks. You can use some crypto. We're coming into a time where crypto is going to be paying passive income, and in some cases without risk, which is good. So there's going to be a lot of new things and change that is going to give people opportunity, and bonds aren't just the only thing that people can look at.
Well, one of the things I've been using for the last couple of years as a bond alternative for part of that fixed is a fixed indexed annuity, so that they can have part of their money, tied to an index where they get a percentage of it, but their principal is always, it locks in and it's guaranteed. And then they can turn it into a pension. And that pension can pay for life. And if they need long-term care, a lot of them have a doubling feature. So especially for some of the women who are single and they need long-term care, that can be an option too, but you have to be careful because there's so many different companies, and you definitely don't want all your money in it because they're not liquid. So you're tapped to 10% a year, if at the most. So, but there's that kind of an option too. So what about real estate investment trusts?
Well, real estate, of course, is not inexpensive right now. We're seeing, I think, somewhat of a topping of the market. It'll take a few more years, but we're seeing, there's all different kinds of real estate and real estate investment trusts. So we can't really talk about it as one market. And also geographically, the markets are different. But just in general, I would say that, we've seen office space get a little bit less used since the pandemic. People are working from home or they're choosing to go virtual. And so that's been impacted. We've seen shopping malls been adversely impacted where they've in some cases gone out of business. Housing is certainly reaching a peak, but starting to slow a bit now that interest rates have risen so much. People are not deciding to make offers right now. They're actually holding off. I did a podcast about that recently where people are actually delaying making an offer or buying a house. So I think we're going to see, more inventory come on the market for personal residences. And that's good because we have the equilibrium is out of balance. We have a lot more people who want to buy than we have listings. And that's not good because that's a complete seller's market and we need more of an equal balance. So maybe more sellers will decide to sell if they get a little worried that maybe the market is peaking a little bit here. And so maybe we'll get some more listings and that will help bring that equilibrium back. But I'm not seeing a stock market crash. Like a lot of people are projecting a stock market crash. I'm not seeing that, particularly in the housing market. I would say later, when interest rates really start to skyrocket, which I have projected in a forecast later this decade, I do see trouble for housing at that time, but I don't see it now at all.
Wow. And just think of all the people that were so lucky to be able to lock in at 3%.
Well, I told them last summer, this is the time to refinance. So if they listened to my podcast, they got that message and I did. I refinanced and I'm happy that I did and locked in a nice low interest rate. So, those rates, I don't know that we'll ever see those again. Those were, something that was a bottoming, and the cycle is now headed up for, many years. And so this is how cycles work. They go for long periods of time. They don't necessarily go in a straight line. So we do, have periods where they may come back down, but we do have an interest rate cycle that is going to be rising over time. So when you talk about things like annuities, you want to be conscious that there may be higher interest rates ahead. And you want to think about inflation as well, because if you have a fixed income that you're getting from an annuity, you're not getting inflation protection unless you choose that or have that as an option. And so those are things that you want to consider with your annuity purchases too.
Absolutely. Yeah. It's so important to look at inflation. I mean, people are, do you think this inflation is going to continue? Because I listened to your podcast and it seems like your thought is it's going to level out, and you look at some of the numbers that are not like always in the media. Do you think this is going to level out?
Well, my opinion about the inflation is there's two main causes. One is it's a supply chain disruption. And so we don't have the steady flow of goods and services the way we should. We've all heard about the ships being parked off the shore and not being able to be unloaded properly. And then they all got unloaded in the first quarter. And then it made it look like there was too much inventory and affected the GDP calculation negatively. And then the other thing is the war with Ukraine and Russia. So we see that the OECD report has come out and said that a significant part of our gas prices going up is due to the war in Russia. When you have oil and gas prices that go up, that tends to filter through the entire economy because, it affects the trucking and shipping, and it affects just about everything we do. It affects, employers and their pricing. And so it tends to, cause inflation throughout the whole economy when we have oil and gas at high prices. So I think the war is causing part of that. And so I do think that there are things that can calm down a little bit later on this year. And we are already seeing signs of the economy slowing. The Federal Reserve raised interest rates so aggressively and so fast that it really caused some discombobulation, I would say. And it is causing things to slow. And because of that, we may see the Fed not be as aggressive. They may still raise rates, but maybe not at 75 basis points. They're looking at maybe 50 for July or possibly even 25. So we'll see how that goes going forward. But we might get a situation where they don't have to raise as much as they thought that they did because things are really cooling. And part of that is because the housing market is cooling off. And part of that is because layoffs have happened in the mortgage space because, again, refinances just came to a dead halt. And also a lot of property sales came to a halt. So they've, I just did a podcast where they were talking, Redfin was talking about laying off a percentage of their workforce because they just don't need them because they don't have the business coming in like they used to. So we're starting to see that the layoffs, that's going to, give us a little bit more weakness in the job situation because we have full employment right now, which is also pushing on the wages. But now having some layoffs, having some companies, start to kind of pull back, we're seeing a little bit of softening in the economy, and that will filter through and that will help inflation. And if we get any good news with Russia and Ukraine, that will help dramatically. So we always hope for peace there.
Now, that's just horrifying what's happening there.
Yeah.
And a big issue with what's happening in Russia, and I was talking about this months ago, is that Russia and Ukraine produce so much of the grain and then the sunflower seeds in Ukraine for the oil. And the countries that really depend on that are the ones in Asia and, primarily Africa. And so the food banks, are just being decimated because they can't even get the grain to the people. And I just hope something happens. This is, Putin is causing right now starvation. So
it's really important that people stock up with extra supplies. I think that's a very smart thing to do right now.
Well, we won't have a famine. We're very lucky, but I really do feel horrible for these people that depend, that's their primary food source. You mentioned income growth for people, and I was listening to Michigan Public Radio talking about Japan. Linda, they said that they haven't had increases in income for 30 years, for 3 decades. And, I left Ameriprise in 2007. And I know that almost the entire time I was there, Japan had that big crash. And, do they have stagflation there? No, they don't even have that because they don't have inflation. What is going on there? Because they said they're having to do commercials now to tell the customers that they're raising prices and why they're raising them, because the prices that they're paying for the ingredients are going up, but they haven't raised prices for 30 years.
Well, the demographics in Japan peaked about 30 years ago, and that's when the stock market there peaked. And so they basically don't have enough population growth to keep everything going. And their biggest population is an elderly population, which is basically retired. So yeah, they have an unusual demographic there, something similar to what we will see in the United States in some years. But it's caused basically deflation in Japan. So yeah.
Amazing. I haven't visited, so my husband has on tour, but I'd like to do that someday. And are the prices there for Americans? Do you have any idea? Like if we go to visit Japan, if the dollar will be worth more because they've had 30 years of no increases? I just wondered. And is it more difficult for them to come here because our prices, have been going up and now they're way up,
Right. Well, that would be more in relation to what the yen has done in relation to the dollar. But I don't know. I haven't looked recently about what's going on with the yen.
Yeah, it just seems that it's very complicated, So let's talk a little bit about the cryptocurrencies, because your latest book, a smash hit. Congratulations! And you talk about cryptocurrency, and most people, when they think of it, people are starting to understand what it is, and most people know about Bitcoin. But still, there's not a lot of people that are actually invested in this. So you were talking recently, because I was listening to you, about is there a bubble in crypto? And we've had this, was it a 50% drop in Bitcoin? Can you talk a little bit about what cryptocurrency is and how that fits into the whole picture of investing?
Sure. Well, I wrote the book, 3 Steps to Quantum Wealth, because I saw it as another cycle coming back, like the internet cycle that we had. And the internet cycle created a lot of wealth and grew into a bubble and popped. And I think we're at the early stages. Like we would be in maybe 1993, 1994 of the internet, versus it peaked in 1999, and first quarter of 2000 is where NASDAQ peaked. But there's so much wealth that's going to be created from this new technology. Now, Bitcoin was the first cryptocurrency that was created, and they created a limited number of them and created a peer-to-peer situation where you could, trade or move money or use it as a store of value. I personally am not a Bitcoin fan. I like something that is useful, something that is a utility. So the cryptocurrencies that I wrote my book about are actually part of what I believe to be a new financial system that is coming. And that's because today, when you wire funds, it can take days to get from one bank to another across the world. It's actually faster to take the money, put it in a suitcase, and get on a plane and fly it to your destination than it is to wire it to your destination, which is just horrible, because we have the internet. We should be moving money at the speed of the internet. And that's what I believe the cryptocurrencies that I wrote about are going to do. So they are faster. They can do trillions of transactions per second. They can move at a fraction of a penny cost-wise. They're scalable. They are green energy, versus Bitcoin is not a green energy situation with this whole mining thing. They don't have to, they don't use mining like that. They use a consensus method. So basically, you've got a situation where we can improve upon the banking system, where anyone can send money to anyone else at very low cost, almost instantaneously. It takes about 3 seconds to send your money. And so this is something that banks have been using behind the scenes since about 2017. And they've already identified which cryptocurrencies are part of this new system that is going to function as a distributed ledger technology. And so that's the exciting utility that we have of some cryptocurrencies. You see, there's 19,000 cryptocurrencies now, and they are not all created equal. There are many scams, unfortunately, and there are many projects that just threw up a website and said, this is, our new crypto, and maybe had no intention of even doing anything, and were able to raise money. And what we really need is regulation, because regulation is going to require certain things that cryptocurrencies have in order to make them actual, financially viable and legal and less risky. So we've seen Terra Luna, which was basically a cryptocurrency that tried to be a stable coin with algorithms, which just wasn't going to work. And so it had a catastrophe. And if we had regulation, what would change that is they would require audits. They would require, financial audits by, on a regular basis. I think they're saying a monthly basis. They would require certain, if they said that they had $1 for every dollar in the stable coin, they would have to actually have that. It would put a limit on what kinds of investments that they could have backing the stable coin. So it would give a lot more legitimacy and safety to the average person to have regulation. And once we have regulation, the institutions will then come in a bigger way. We already have some family offices. Some of the very wealthiest people in the country, or actually in the world, have invested in cryptocurrency to the tune of 1% to 5% of their portfolio. But once we get regulation, the institutions can come in, the brokerages can come in. The financial advisor will be recommending 1% to 5% for their clients' portfolio, perhaps in some cryptocurrencies. And so I think that's going to be a really good thing. And those regulations have been proposed, but they haven't been passed yet. So we're in the prehistoric era of crypto. A lot of cryptocurrencies will not survive these regulations, but that's okay. If you know the ones that are already complying with the regulations, that are already chosen to survive in this new financial system because they have great utility and reason for being, and they are already doing everything legitimately, those are the ones that you want to invest in my opinion.
Well, and it seems like everyone is getting used to using their iPhone. I was driving to a restaurant to meet some friends. And well, it was actually people that I wouldn't ask to, borrow money from or whatever. And because I realized I didn't have my wallet. And I thought, oh, what am I going to do? And thank God I was going to, it's maybe a chain, Bahama Breeze, a big restaurant. And my daughter called and she said, Mommy, don't worry, just use Apple Pay. And, and I have PayPal, but I don't have Apple Pay. And I thought, well, I can't do that. I don't know my credit card. Well, I called my husband, pulled over, called my husband. He read off my credit card and I set it up in just a few minutes. And when I went to the restaurant, I told the girls and they had a chuckle. But when the waitress came over, no problem. I guess a lot of people are using this. And I think the whole thing with COVID really sped this up, because when I was at the mall and I went to one of the specialty stores, he had a glass plexiglass thing and wouldn't, it was a card shop. Yeah. And would not touch me or anything. We had to slide our card under, and a lot of people were just sliding their phone under to do, or not even just doing stuff with their phone. So we're getting used to this whole idea. How close are we to, do you think, to digital currency here? Because I even heard Chairman Powell talking about it.
Yeah, well, central bank digital currencies are going to be a digital version of each country's currency. So countries are already talking about it. Some countries have already started. The first cryptocurrency that's a central bank digital currency was the sand dollar in the Bahamas. So we have the first one out already. We have others that are pegged to the dollar, like in Bhutan, where they're using it. And basically, I think we're probably within the next year, we should see most of the countries come out with a version or a proposal. In fact, they're talking about how that was, projected to be about a year, but they want to move it up sooner now. So it could be sooner than that, and I hope it is.
So, and you think it's a good idea?
I think it's a good idea. Now, some people have a concern because there's been all kinds of talk about, oh, is this going to be a social credit system? Are they going to trap us with our cryptocurrency, et cetera? But I think it was Thomas Emmer, a senator, proposed that the Federal Reserve not be the one to handle our wallets. Now, that's a huge thing, and that keeps it from being a social credit system. So we don't want to have a government agency control our wallets. And as long as we can keep it personal, then I think we are protected from having this, communist social credit system, where in China, what they do is they control people by cryptocurrency, which obviously is not a good thing, and we don't want that. What we want is the ability to, have freedom with our money and use it the way we use money today, but have it a little bit more convenient and less expensive to send money, and able to basically transfer to anyone all over the world. I mean, think about it. It's actually going to bring a lot of wealth to people because, for example, you could get online and, there could be someone in Africa who made a wonderful bead necklace that you want to purchase. And in the past, that would be difficult because they may not have a bank. Many of them, and many people in Africa don't have a banking system, according to reports. And so it's a different world. But if you had a system where you could transfer money to their phone, you actually could buy the necklace. And, it could be also handled so that the money is held until you receive the necklace, and then the money is released. So there's smart contracts that are coming that will enable this to all be automatic. There's all kinds of new technology that's going to bring money to places that didn't normally have the opportunity to receive money. And it's going to be life-changing for them. So it's very exciting, I think.
And I saw, I get probably on 60 Minutes or some kind of real quick news show. And it was about, I don't know what country in Africa, but they had created their own little currency that they were able to use because, again, they didn't have banking. And the taxi cab driver was using it, and the people were able to have little businesses and just have freedom, have cash flow, because they apparently did not have bank accounts. And then they had the solar panel on the roof that was giving them electricity. So all these little things was going to be interesting to see what happens in these emerging, countries. Because things could change very quickly for them if they get access to capital. So
that's right. And it's going to make a huge difference for them because actually there's more that are unbanked than have a bank account. Mm-hmm. There's more people in the world that do not have a bank relationship. So this is going to just bypass that, and people are going to be able to send money wherever they want to send money, and very inexpensively and quickly.
Yeah, that's just really exciting. I know that what is the country at the top in Central America that they made Bitcoin their official coin, their official currency?
Oh, right.
I can't think of it right now, but the journalist went there and he's trying to shop. He's trying to shop using his iPhone with his Bitcoin. And the problem was it was taking so long. Like really, really long. And, that won't happen with some of the cryptocurrencies that you've shared with us and that you talk about on your show. And so it seems like not only banks and companies will be trading, but us as consumers will have access to either digital currency or cryptos that we can use. Probably just like the Apple Pay, maybe it would be just part of that whole application. You'd have all kinds of choices.
Yeah, well, oftentimes the first technology is not the lasting technology. We have lots of examples of this. People often talk about MySpace being the first social media online, but then they weren't the ultimate winner. It was Facebook. There's other examples. Napster was online music, et cetera, and wasn't the big winner there. We have Pandora and Spotify and other things, but it's really, I think Bitcoin, they wanted it to be a payment system. It just was too slow. The whole system just does not work great for payments. So then they turned it into a store of value. Now they're trying to make it payments again. They're trying to, add things to it. There's other technology that already exists that doesn't have any of these issues. And it's green energy too, which is even better because we need to think about the environment as well. But what we have coming is we have things like cryptocurrencies that are going to provide passive income. So we have smart contracts, and that's something that we're excited about, the airdrop coming in July with Flare. So Flare is going to provide smart contracts for our cryptocurrencies, and it's going to allow us to be a bank. So we can be our own bank, and that means that we can lock in cryptocurrencies and certain returns on our cryptocurrency on a passive basis. So this is the first time that it's going to be done securely, from what I understand. And we're really excited about that. So there's going to be, 5 or 6 different ways that we can earn passive income. And that's going to provide, some more alternatives to us than just looking at bonds or other, some of the old asset classes that we've had to provide income for us. So we are moving forward with that, and we're excited about that.
Okay, so, I'm sure people are listening going, what is a smart contract?
Well, a smart contract is something that you have programmed in that basically allows things to happen automatically. So, for example, when you buy a house, you have a lot of things that happen after you buy the house. You have to have the appraisal, you have to get the financing, there's different credit reports, there's different things that happen, right? So there's a whole list of things that your loan officer goes through in order to close the house. Mm-hmm. And these things, in some cases, are going to be automated. And that is something that will just happen automatically. When you buy a house, you'll have the contract, and then the smart contract will just run through. Everything has to be done. And then once everything's done, it releases the funds and the title, and the title's recorded, et cetera. So these things can be automated. And so a smart contract really can do, multiple things. It can basically release funds at a later date, but it satisfies whatever needs to be done in order to meet that contract that both people agree on. So that's really all a smart contract is. But it's going to allow people to, loan money to people to buy a house, or to, do all kinds of different things. Like, it's going to change how we invest, because people will be able to invest in the future because assets are going to be tokenized. So a house could be divided into tokens and created so many tokens, and then people can buy so many tokens and be a shareholder of that home. So it's going to change how assets are invested in the future, how people buy homes in the future, how we use them. So it's exciting. We're going through a big change and a digitization of money that's going to change a lot of things for the better, I think.
Well, and you're talking about the homes, and one of the big issues, especially I think down in North Carolina, where the real estate is still very reasonable, big corporations are coming in and they're buying 40% of the deals. They're buying up the houses, and they were selling them. Now they're renting them out. And so I'm wondering, though, some of the couples that were being interviewed, they really don't mind, because then they don't have to deal with all the maintenance, and and they can stay free as a bird, because when their lease is up, they can go to another place. I think what's horrible about it is that it's really pushing out the little guy. And because you're working with these hedge funds and corporations that have lots of money, they're coming in with all cash. And it's, in fact, I know a young couple that they kept putting in bids. They bought a house pretty much sight unseen, and they drove past it, but that was all they could do. And it ended up being perfect. But, that's another thing that's happening. How do you feel about these corporations buying houses and competing? I almost feel like it should be illegal, or they should have some restrictions.
Yeah, I definitely don't like it. Buying a home and owning a home has been one of the best wealth building opportunities for people. If you look at the baby boomers, a lot of their wealth has come from owning their residences. And so this has been a tremendous wealth building opportunity. However, also that wealth building has come from the value of the dollar declining. So the dollar has basically lost value, and that's why housing has gone up so much. So it's also a function of our currency. And if we have some change to our currency, which I think we're going to have some adjustment and maybe change in our system, that might help to keep prices a little bit more stable. But basically, I believe that people should own their own home. I think it's a wonderful thing to be able to own your home and participate in any growth that your home has. Yeah. And it's really a forced savings plan, because if you think about it, even if we didn't have appreciation, if you borrowed $300,000, let's say, to buy a home, and you paid that off over 30 years, that was a forced savings plan where you actually saved $300,000, and now you have that as equity. So whether the home appreciates or not, it still is something that I think makes sense for people and appreciates, in their own net worth. So I think it's important for people.
And it's a way people pass their wealth to the next generation historically.
It has been. Yes, absolutely.
So we're coming towards the top of the hour. I really want to talk specifically about women. I started to at the beginning, and then, we got into all this juicy stuff, but this idea of women being such great investors. And I remember when, reading studies about why women are better investors than men. Can you talk a little bit about that?
Well, the studies that have been done show that women take a little bit more time to maybe evaluate a company. Once they decide to invest in a company, they tend to own it longer. And that has worked in women's favor, so that over time, when they analyze and do these studies, the women's returns tend to be higher. But what really worries me is that so many women aren't interested in investing, or aren't really investing for themselves, aren't really putting a lot of effort toward learning it. And I lost my husband suddenly years ago, and I understand that a lot of women will probably outlive their husbands, but many of them, if they aren't familiar with investing, they won't understand what they own, or about the portfolio, or what's in it, or what should they keep, or what should they not keep. And so it's really important that women learn to invest, not only for that reason, but also, if you think about it, women earn less on average than men do. We have that gap, the income gap. And the way to make up for that is to invest well. So if women can learn to invest and invest well, they're going to make up that wage gap that they might be experiencing in the corporate world.
And this whole idea of investing long term, can you talk about this idea of two things I want to touch on? One is especially for all the young people, and then all of us who are just going to live for a long time. And, we don't need to take money out when we retire, because we have pensions and Social Security. We're just lucky. We have the old style pension that only 4% of the people have anymore. But this idea of the compounding, because I think it was Einstein said it was man's greatest invention, is compounding. Can we talk a little bit about how that can work in your favor? And then the idea of just staying invested and letting that work for you and not being emotional.
Yeah, well, actually, there's three parts to wealth building. There's money, compounding, and time. I wrote about that in my first book. And so the money is, how much money do you have to invest? And most people have a limited amount of funds to invest. They don't have access to some great amount. They have money that they earn, and they can do it through their 401k or something like that. But they typically are starting out fairly modestly. So that's not a lot of flexibility there. And as far as time, the earlier you can start investing, the better off you are, because with compounding, it does tend to build more over time. So if you have a 30-year time horizon, that's much better than if you have a 10-year time horizon to try to achieve your financial goal. And then the compounding part of it is really where you can make a difference, because if you're a good investor and you can get a 10% average annual return in the stock market, or possibly better than that, and even in cryptocurrencies, then you're going to compound your money faster than if you leave it in the bank at 0% or 2%, which will compound your money very slowly. So the money, compounding, and time formula is really the three parts. And really where you can make that difference is compounding. And that's one of the reasons why I wrote my second book, was because the opportunities to compound at higher rates were amazing with cryptocurrencies. I mean, we've seen some cryptocurrencies increase at thousands of percent in a few years, and people have built tremendous wealth already. Many people are familiar that some people have been building, tremendous wealth with Bitcoin. We've heard the stories of, people making hundreds of millions of dollars in some cases if they were early Bitcoin investors. Again, I'm not a Bitcoin fan, but you don't have to invest in Bitcoin. There are other cryptocurrencies that have done even better than Bitcoin, and people aren't really familiar with that or aware of that. So when I saw the compounding rates of return for the last 5 years, 7 years, and really started to think about, if we're going through another technological boom like we did with the internet, and people knew about that early, then they could invest early and compound their money at higher rates, which is going to make a huge difference to them in their later years, or whenever they want to use the funds. So that's what's exciting right now.
Well, and the cryptos have come down a lot recently.
Yeah. Certainly, Bitcoin has come down a lot, and other cryptocurrencies have come down a lot. But again, we're early. We're not even in a point where we have regulation. So this is the prehistoric days of cryptocurrency. As I said, this is like 1994 or 95 in the internet. And if you were around during that time, you know that what happened was we went into this huge bubble where things, went up dramatically and were just incredible in terms of how much money was created. So I think we're going to see the same thing this decade with cryptocurrencies. And what this does is gives us an opportunity to invest, in many cases, under $1 for each cryptocurrency, which sounds crazy. How could it be something so valuable when it's only at 35 cents? But these things that are going to come, 5 years from now, I think we're just very, very early. And because we're ahead of the institutions, we're ahead of a lot of the big money that's going to flow in here, that big wave will come, and that big money will want to own these cryptocurrencies. So yeah, it's amazing that we can buy them so inexpensively today.
Mm-hmm. Yeah. And the secret is not to be emotional. I see all these people that are, trading and trading and trading. And I just want to share that I saw this happening back in the internet days. And I had someone come to me who had her account up to 1 million with the trading and trading and trading. And then when she sold, when the market crashed, she had all this tax that was due, but the account was worth less than the taxes. So I think people have to be really careful, get really good advice when they're doing anything like this. So we're not giving investment advice. We're really recommending people work with their advisors. I think getting your book would be really smart, both of your books, and, listening to your podcast. To stay up on and educate yourself. That's probably the most important thing, Linda. Talk a little bit about this idea of educating, because I had a stat here that 80%, 53%, this is from the Fidelity Fit study, 53% of women are not confident discussing money or investing it with even a financial advisor. So this idea of understanding it and getting smart about money, I think, is so important.
Right. So I just want to say about the trading, I don't recommend that people trade cryptocurrencies at all. I know that there's a lot of businesses out there that are trying to teach that. That's not what we do. We're long-term investors. We buy something that has incredible potential. We're looking for the next Amazons, the next Teslas, et cetera, to buy at a very low valuation. And that's what we're investing in, holding for the long term. But you're right. Women would rather talk about, their death, their own. This is a true study. Women would rather talk about their own death than they would talk about money. So women are not comfortable talking about money, but it's really important that women learn. Now, a lot of my clients have financial advisors that they work with, and that's fine. Their financial advisor, is at a firm, it's handling their money. But the women tell me, I don't feel comfortable talking to my financial advisor about, my questions. I don't get my questions answered. They're speaking in I don't understand what they're saying. I feel affected. They might be the main breadwinner in the family, but the financial advisor talks to the spouse and not to them. I mean, I hear all these stories and the women are just horrified, and they have their money with these people, but they're so disempowered. They don't understand what's happening. And so what I wanted to do was speak in plain English. And, I created a short podcast, which is less than 15 minutes, 3 times a week, so that you could quickly, while you're taking the kids to school or grocery shopping, have a podcast in your ear and get up to date on what the important things are. You don't have to know everything, but just a few things that'll keep you right up to the minute on what's going on and what you need to know. And if there's anything you need to do, or if it's the right time to refinance or something like that, I try to give you, practical tips that people can put and use in their life. But what they love about working with my VIP experience is that they can ask questions in a safe place, never feel stupid. If they want to know what's going on with the markets, they're getting information in plain English. Oftentimes, I'll give my forecasts about where I think things are going to go and what's going to happen next. So they have a little bit of advance notice of certain things that might be coming up. And this is something that has helped women sleep better at night, feel better, feel like they understand their money. They can talk with their advisor better. A lot of times they'll make some suggestions from our portfolio, what they might want to add, and their financial advisor, they can talk with them about it and do that. So, and also they can take, 1 to 5% and put it into cryptocurrency, which is not correlated with the stock market. So it's, again, a long-term investment for pennies on the dollar right now. My favorite cryptocurrency is about 30 cents right now. So it doesn't take a lot of money, but yet you have a position in something that I think has tremendous growth for the future that can make a huge difference in your financial situation. So yes, it's important that women are educated, learn about things, can talk about money, and also realize how fun it is, because investing is actually a blast. And once you, really understand it and what's going on, I think it just changes everything.
Yeah, I do too. Yeah, great. This is a great way to end, Linda. It's been so great having you here again.
My pleasure. Thank you, Katana.
Yeah, you're welcome. So everyone, thank you so much for being with us today. We want to invite you to get on our podcast. If you haven't had a chance to do that, it's you can go to smartwomentalk.com and you can go to your favorite podcast. Wherever you get it, you're going to get the show. And if you have not joined our free community, go to joinsmartwomen.com and you'll get our monthly easing. You'll know who's coming on the show. Like this month, you would have known Linda was coming and her topic. And we also put in free gifts and links there. And you'll also see great articles, but you'll be invited to the Smart Women Academy. And that's where you can get smart about your money, your life, your health. It's a free online school. So until next time, go out and live with more purpose, passion, and prosperity. Smart Women Talk is brought to you by Smart Women's Empowerment, a 501c3 nonprofit project of United Charitable. Music by Bill Lucas from his album, When It Rains. Available on Apple Music and Spotify. Catch us wherever you listen to your favorite podcast, and be sure to join our free community at joinsmartwomen.com to access all our free Smart Women resources.